remember how to do that. I did it. Hello, everybody. Welcome, welcome. This is Julie Hoffman. Welcome to the Rent to Own Done Right webinar for real estate professionals, mortgage brokers, and realtors. I am the Street Smart Diva, and I'm also one of the founders of the Okanagan Real Estate Investment Group right here in Kelowna, British Columbia, Canada. I've been investing in real estate since 2001. I've done hundreds of deals and millions of dollars in real estate. And one of my very favorite ways to invest in real estate is through rent to own. So thank you for being here so I get to talk about one of my favorite real estate topics. And thank you to all of you who are watching this recording. Your time is valuable, and for you to take an hour, hour and a half out of your day to learn about this exciting strategy, it's my hope that it's well worth your time. So we have a couple of very special guests with us today. We have a superstar real estate agent from the Lower Mainland in British Columbia. This is Kelly Fry, and Kelly and I met way back in 2010, actually, through the Real Estate Investment Network Group, or the RAIN Group. We've spoken over the phone quite a few times, and she even helped me to sell a townhouse condo down in the Langley area. She's always been so professional and friendly at the same time. Really is always just there to be helpful in any way whenever I've called to ask for her advice or guidance. She's an award-winning real estate agent with an extremely successful team. And what sets her apart from other real estate professionals is that she has been using rent to own as one of her many strategies, and she's having massive success with rent to own. So Kelly, I'm just going to unmute you now. Do you have anything else to add?
Well, thank you very much for that intro. What I'd like to add is that it's easier at the moment to do rent to own than it was last year when we were in multiple offers and subject to the offers. So at the moment, we have lots of deals in the works because at least we can get a hold of properties right now. So that's all I want to add.
No, that's great. And isn't it interesting how as the market changes, it can determine how easy or difficult it can be to do a rent to own.
And we also just did our most expensive rent to own that we've done to date on a $1.241 million house in Port Moody.
Wow, $1.24 million?
Yes, a tenant put down $100,000 as an option consideration and is paying $7,600 a month in rent.
Wow, wow! I bet it cash flows fairly decently then. Yes?
Yeah, it's about $2,800 positive a month for the investor.
$2,800 positive cash flow for the investor. Wow.
That's our most to date.
That's amazing. Just wow, that is absolutely amazing, and it's becoming more and more in demand. So
yeah,
absolutely. So everybody has heard about rent to own. Very few people know how to do a rent to own, and even fewer folks are actually out there doing it correctly. And I was just with some tenant buyers recently. They were getting ready to purchase. They had good credit, 5% down payment, so about $25,000 to put down. But they were turned down due to income. Since the new CMHC rules have been put into effect, it is pushing good people with strong down payments and great credit out of the buyer's market. And while this is it's really tough on a lot of folks, the timing has really never been better to learn about rent to own. So congratulations if you're here either live or if you're watching the recording, because we're all really on a leading edge of an exciting strategy. It's been around for a long time, but it's in more and more demand. So any realtor or mortgage broker who knows how to put together a rent to own properly is going to have a distinct advantage over anybody else in the market. So our headliner for tonight is somebody who I met fairly recently. My husband and I started the Okanagan Real Estate Investment Group along with Jason Mosley, who's also a mortgage broker. And Ross came out to support us since our first event. And since then, Ross has been absolutely instrumental in the rapid growth of our real estate group. We actually double in size practically every meeting, and he has a lot to do with it. It's been a great experience working with him and getting to know his wife Barb, his son Jeff, and he keeps bringing all these great folks out from Enderby actually They have their own kind of little group in the back of the room. It's kind of fun. And of course, best of all, they live right here in the Okanagan where we are with the Okanagan Real Estate Investment Group. So we are especially lucky to have him so nearby. Now, Ross Lightle is the owner of the Farmer Logic Business Training. He's been investing in real estate since 1977, been doing rent to own since 1983, and he's coached literally thousands of successful real estate investors on how to do rent to own the right way. So with that, it is my pleasure to introduce to you your rent to own done right trainer for tonight, Mr. Ross Lightle. Hey Ross, can you hear me okay?
Absolutely, Julie. Can you hear me?
I can hear you great. And if anybody has any questions, you can type it into the chat, but I'm just going to hand things over to you, Ross.
Okay, perfect. So good to hear Kelly's voice, and Kelly, so good to hear you, and we need to connect more often for sure. He's a superstar, as you say. Many years ago, I coached Kelly, and now it's so cool because now I go to Kelly for advice. And
the student becomes the teacher.
Well, and you know what? Whenever I'm coaching people, and I coach, as you know, Julie, I've coached thousands of people, and I always say to people, if the coach thinks that they should be your last coach, you need a different coach, because that coach isn't humble enough to realize that they don't know everything, and the coach can always learn something from somebody else as well. So, as you know, as the diva.
Absolutely, absolutely.
Okay, so let's get going here. We've got lots to cover, and we're looking forward to, I always like dealing with the real estate professionals, the mortgage brokers and the realtors and the other professionals in the industry, even lawyers and accountants and those sort of people that are involved in this real estate industry. And a lot of them will come into or hear about rent own and maybe even have a negative thought against it. Unlike Kelly, of course, who came into the rent own industry and then became a realtor, and she went in with a totally different mindset, which opened her up to a lot more opportunities. So the course is rent own, and we named it Done Right because there's so many rent owns that are done wrong out there. And really, it's the ones that are doing it wrong, and the people that are doing it, they scam or anything like that, that actually tarnishes the actual, all those other bad apples. And we are on a mission, because we do work across the country and rent home. We work from Ontario to BC, and we're in the mission for our mission is to get the right information out there and get people to do this business correctly. All right. So with that in mind, I'm not a lawyer, not an accountant, but I am a husband, a dad. I'm a servant. I'm a businessman. I'm actively investing in real estate all the time. Had a lot of successes and, most importantly, a lot of failures, because you always learn more failures. I've been a coach and trainer and speaker for a lot of years now, 20 years, I guess, in Canada and in the US. I'm actively involved in the rent-own industry right across the country. So it's always good when you learn from somebody who's actually in the business and not just, that's walking the walk, not just talking the talk. Okay? So what is an option? Well, an option is very simple, actually. It's where the owner or the seller, or sometimes known as the optionor, and extends or gives or keeps an offer to the buyer, or sometimes known as the optionee, to buy the property at a predetermined time and usually at a fixed price. That's the only way we really like to do our business, is with fixed prices. We don't like the formulas of trying to figure out what the price will be in the future, because we don't think that's fair to the person actually buying the property when there's a formula, simply because if that formula is too much, they may qualify as something that we set today, and if the formula is based on an appreciation, for example, when they actually go to buy, they may not qualify, and we think that's not very fair at all. They can use in a lot of businesses where anything that could be bought or sold, Even in the stock market, you've heard of doing options. Some of the wealthiest people that trade in the stock market are, of course, doing options. So an option is not anything that's new. It's even not certainly new in real estate. It's been around in the real estate world forever and ever. And it has got a lot more complicated, and we're going to touch on that in just a moment. Now, the essential elements, it must be in writing. Verbal doesn't work. It's got to be signed. There's got to be some consideration. As in any contract, there has to be some consideration. And it must state a time period, because an option that doesn't have a time period, well, just like any other contract, is not valid. Okay. We like using conditions in our option, and we like to clearly state what the purchase price will be in the future, as we just finished saying. So, options used to be very simple, at least in my world. I mean, when I started out, it wasn't even a contract, it was simply a handshake. Handshake that, hey, listen, why don't you rent for me, and then when you go to buy the place, I'll give you all your rent money back. I mean, that's as simple as it was. I mean, there was no rules about how much rent you could give back as there is today, and you know, that sort of thing. So CMHC really wasn't involved in this business. It was a very simple business and done on a handshake. And then we got really sophisticated, where we put it as a one-page contract. And then it wasn't long after we did a one-page contract that we jumped into 3 pages. And 3 pages was like, whoa, we're pretty sophisticated now. And then it went to, well, we better do this inside of a corporation, because one of the things that is most people don't realize is that the lease and the option must be done in 2 separate corporations. And there's some very good reasons for that. One is, and we're not going to go into super detail on the webinar, Julie, but one of them is that from a risk management point of view, it is essential that you do them in 2 separate entities, 2 separate corporations, the lease in one corporation and the option in another. And we only ever put 1 option in per corporation. And any of the real estate professionals that are listening right now and really understand risk management will really, really appreciate that little tidbit right there. Because imagine that you put more than 1 option inside 1 corporation. If one of them happens to end up in a lawsuit, guess what? They're all tied up in that same lawsuit, and you may not be able to go to your client. So from a real estate professional point of view, that is disaster, because now all of a sudden their name is tarnished, like, oh, well, I'm tied up in this lawsuit, I can't even own the property, And so, you know, that's why we go to great lengths. You only ever put 1 option in every corporation from a risk management point of view. And from a legal point of view, if the option and the lease are done in the same entity, the option could actually be null and void. So we don't want to have them in more than 1 corporation. We want to have them in separate corporations for sure. All right.
And Ross, said, sorry to interrupt, but I think that's the biggest thing. Whenever I'm talking to a realtor who doesn't know much about rent to own or a mortgage broker, it's this stigma, because a lot of them fall apart, and a lot of the biggest reasons why is typically because of the paperwork, because it's not familiar, and a lot of banks don't well, they basically frown on rent to own. So this training, what you're saying is this training basically helps make sure that everything is put together correctly well ahead of time, so that when the tenant buyer goes to exercise their option, the paperwork is correct. The paperwork is what the banks are looking for, so that it can actually complete.
Oh, it's so true, Julie. It's so true. If the paperwork's not done right in the first place, there's no chance this deal is going to close. And it's just like if, you know, Kelly was to write a purchase contract that wasn't correct, it's not going to close either. So that's why you hire realtors, so to make sure your paperwork is done correctly. And you know, all the paperwork that we use was written by lawyers. I mean, we just didn't hand scribble on the back of a napkin somewhere. All these are written by lawyers, and they're tested. We actually close with these deals. and we close with the paperwork we have in place. All right, so not very many options you'll ever see with closing instructions written right inside the option, and that was actually done by a mutual friend of Kelly and I, a guy named Rick, and he was the one that suggested that we do that. I met Rick through Kelly, and he's been instrumental, and he's a lawyer in the Lower Mainland. He's been instrumental in helping us set up what we're doing today. So absolutely true, 100%. If it's not done right, it's got no chance. Paperwork's got to be done right. Okay, then speaking of paperwork, this is what it looks like today. And to do a rent-own deal correctly, we need 11 different contracts. And when we do the training, Julie, we will be explaining this spider web of it looks like a spider web. It looks sort of daunting for a lot of people when they first look at it. But when it's actually explained, it all makes 100% sense. And then when it goes to close, and the main thing is when it goes to close, people will actually be able to close these deals. And the banks will look at this and go, yeah, I like this. And we're in some pretty high level talks right now with some major players down in Toronto, major lending players who want to take the system that we are going to be teaching on April 7th to 9th. They want to, and they're major lenders, major lending people, they want to take our system and they're talking to us about bonding it and insuring it. And when we get that done, Julie, we're at a whole different level than the average person out there that's doing rent to own. And the reason that they want to do this is they've gone over with a fine-tooth comb all of our paperwork, and they really like the way that we put this together in such a way that lenders will, they do like the paperwork, and we will be able to close. All right, so we're going to explain this big spider web I've got up there in great detail, and when everybody leaves at the end of Sunday, because it is a Friday, Saturday, Sunday event, there isn't one person, I promise you, I won't leave until everybody knows and understands everything that's on this little picture right here. All right, so that's the complicated version. Here's the big picture of what this actually happens, how it works. Well, first of all, we have these two entities that we talked about, and that has to be done in separate entities. So we just for example, we're going to call one a management corporation and one an option corporation. They could be just numbered companies. It really wouldn't matter. And this management corporation is going to sign a lease with the tenant buyer. And the option corporation is going to sign an option with that tenant buyer. And now you could look at it and say, well, the management option is that's you in the middle. And the tenant buyer, that's the person that does for whatever reason, and we're going to talk about all those different reasons in a second here, does not qualify to buy the property at this particular time. And if it's not enough down payment, credit, whatever the issue is. So this is our rent-own structure. Now, that allows us to gain only one option in that option corporation. Next time we do another tenant buyer, we'll have a brand new option corporation. Now, over on the other side, we have this owner, or we have another corporation that actually owns the title. So whether it's an owner or a corporation, they will have the title to the property. And that owner will sign a lease with the management corporation. And that owner also will sign an option with the option corporation. And so this is known in the industry. A lot of people listening might have heard the term sandwich lease option. Well, in reality, whether you buy the property or you have the owner lease option the property to you, everything in our world is a sandwich lease option, and that means you're the sandwich in the middle. Your corporation is the management corporation, the option corporation are the sandwich, and the buffer between the owner and the tenant buyer. All right, now what happens at the end, just a big picture, overall picture, is at the end of the term, whatever that term is, you will see that the owner, the person over here, will actually, the owner on the left side there, this person here, will actually sell the property directly to the tenant buyer, this person over here on the right. So that's what's actually going to happen. is there's going to be a direct sale between the owner and the tenant buyer, and you're going to get paid in the middle. And we're going to explain exactly how that works. Now that satisfies all the lenders' rules that you have to own the property for 3 months and all the rest of it, and it makes it a very simple transaction with that always, you know, there's no reason for it not to close, because it is actually a direct sale between the owner and the tenant buyer, and you are not involved in that middle. You know, you're not signing the property or flipping the property out or any of those other, you know, weird and wonderful things that you actually see some people do sometimes. All right, so, and by the way, Julie, if there's anybody has any questions, just please jump in and stop me, or Kelly, if you can add anything to this, just, you know, jump right in. All right?
Okay, Ross, I will.
Okay, now, this is, I'm gonna run through this really quickly because I know for all our industry professionals, they're not really terribly interested in the whole strategy, but just to give you an idea, there's 10 major steps where we set up the proper corporate structures to protect the owners, to protect the tenant buyers, and to protect ourselves. And we build the tenant buyer database. We find all the tenant buyers that currently don't qualify, and we'll show you all the reasons, that the potential reasons in a second. Then we're going to find the properties. We either purchase them or we have the owners give us the property. And I would say right now, approximately in our office here, and we're working right across the country, about 9 out of 10 of the properties we have, the owners just give us the properties. And there's 2 major reasons, and we're going to talk about that in a second too. All right. So we get the properties, and then what we got to do is we got to show the properties to the tenant buyers. We pick the most qualified one. That usually depends on the person that has the most down payment, and you know, to get $100,000 is a nice down payment to get. It means that that person is pretty committed to that property, as Kelly was mentioning at the beginning. Now, with her properties that are over $1 million, she's going to need another $100,000 plus closing costs and you know, land transfer tax and all that sort of thing. By the way, BC has the highest land transfer tax in Canada. So they're going to need more money, but there's a way of doing that and getting that for them. And those high-end properties are tough for people to come up with now, the down payments. There's, you know, Toronto and Vancouver, it's getting harder and harder. And I actually have said this for years now, and I believe that it is coming true now that rent-to-own is becoming mainstream. We're coming into the mainstream. That's why these lenders in Toronto are contacting us and saying, hey, we want to talk to you. We heard you're the largest rent-to-own company in Canada. We want to talk to you and we want to look at your systems. Because I think even the lenders are starting to think it's mainstream.
And Ross, a lot of the clients that we help are self-employed. So they're needing a minimum of 10% down or more. And quite often they've got deposit money, but they don't want to drain their corporation. They need their working capital. So this is a way for them to do it over time, basically. Oh yeah, I mean, and when you've got this kind of a system at your fingertips, whether you're a mortgage broker or a realtor or anything else, it widens your net of possible clients, right? Absolutely, because I'm not in competition because these people can't buy anyway. Yeah. It's so cool when you don't have competition. I love it. All right, so now we meet the tenant buyer the day before move-in. We do the move-in inspection. We sign the new home manual. Now, this is what industry professionals just love this about us. What we teach you is we use something called a new home manual, which is actually a 106-page lease. And then we have this other thing called a guide to home ownership, which is actually a 29-page option contract. And for people who just hear about this, they might say, that's excessive, that's ridiculous. I mean, that's 140 pages of paperwork that these people have to sign. Well, it might be excessive, but we get their attention. And I will tell you this, after they're done with us, the normal reaction is, wow, that's the best we've ever been treated. Like, this is amazing. We don't have any pushback on this. And it is done right. And by the way, yes, we do have their attention. And do we have our butts covered? Absolutely. Is that good for the investor? Yes. Is that good for the tenant buyer? Absolutely. All right.
Everything's in writing. There's no, well, we didn't understand. No, it's all in writing. Then we do our 4 inspections a year, and in BC, that is the law, once every 3 months. And whether it's BC or any other province that we work in, we don't change. We just believe in 4 inspections a year, and we think that should be a minimum. We do a spring tune-up inspection the first week of March. We do a first of 2 safety inspections the first week of June. We do our full inspection the first week of September, and we do our 4th inspection, which is our 2nd safety inspection, the first week of December. And we get them to sign off that there's no unsafe conditions in this property. So, you know, we really do believe in looking after the property, and for all of the professionals that are listening, I know you can appreciate that as well. Okay, we send the tenant buyer an exercise option notice 120 days out. We want to make sure that they're going to be able to close, and we want to give them enough time to, if there is any little issues or little hiccups or something's going wrong, we're still going to close this deal. And if we know in advance, we can always find a way to make this deal happen anyways. But if we leave it to the last minute, it might be too late. So that's why we do that 4 months out, just so we have enough time to figure something out in case there's something come up. You never know. Now we complete the purchase and sale paperwork, which is the contract directly between the owner and the tenant buyer. And then we go celebrate, because typically, I'm just using a really low average here. We typically make about $40,000, and that's with infinite ROIs, because very seldom do we ever use our own money. So you don't use your own money, it's an infinite return on your investment. And that would be on just a normal, typical type of deal. The one that Kelly mentioned at the beginning of the of this webinar. Certainly, I don't know what her numbers are, and it doesn't really matter. But I can assure you, it's going to be more than $40,000. The higher price the property, the more profit there is, generally speaking. Okay, now what's the catch? Well, you have to do this thing, and how much time? So some of the real estate professionals that we have out there say, well, I'm already busy, you know, being a mortgage broker. I'm already busy being a realtor. How am I going to do this? You know, can I make any money at this? Well, for you guys, it's more of a, as you go through life business, as you're doing your own business, the opportunity for rent to own will just appear by itself. It's not like you have to go out and do something extra. But you know, I always get the questions, well, how much time do I need to do a deal? Well, it's somewhere between 20 and 40 hours typically. And then, well, how much money? Well, there's no money required. And how much credit do you need? Well, if your credit's an issue with you, good luck, because you don't need any credit either. Nobody's ever checked my credit. How do I do this fast and efficiently? Well, the best way to do this is come to the class on April 7th and 9th, because you're actually going to be working with somebody and being taught by somebody that's been doing this for decades already, and we're still doing it. We're still in the trenches, and I'm going to bring my whole team in there. The whole circus is coming to town, and we're going to bring in the tenant buyer specialist, the master, we call her the master of the tenant buyer universe. We're going to bring in the contract specialist. I've talked to my lawyer, and he's seeing if he can free up the time, and if he can, he'll be there to answer any legal questions. So we're going to bring the whole team in to see you guys and answer any questions that you might have, and give you 3 days of nonstop information and knowledge, so you go out there and just make this thing really happen for you. Because this is actually this is becoming mainstream. I guarantee it. This is going to be the way. With the median income and the price of homes, with that gap getting further and further apart, the rent-to-own option is becoming not even an option anymore. No pun intended. Okay, so these are the people, the kind of owners that we can help. People who can't sell their home in a slow market. Now, Kelly mentioned something interesting, because as you know, we do work in the Lower Mainland, and yeah, when things are popping, well, you know, people say, well, why should I use an option? I can just sell my home tomorrow. And that's often true. Sometimes, though, there's some pretty high interest differential and payout penalties and stuff. But in a slow market like Alberta, Saskatchewan right now, oh my goodness. You could just walk down the street and pick these houses up. The owners will just hand them to you. Okay, now, people who are relocating, they don't have time to even sell their home. They just need to get out of it and move, like a lot of people did in the fires in Fort McMurray. And when Fort McMurray, the oil went down, they went back to Newfoundland or back to the Ontario, wherever they were originally from, because that's where the jobs were. So they just left their houses and they don't know what to do with them. They can't even sell them. People who live a long way from the property, they're just sick and tired of managing it. They can't manage it from a distance. I've got one of those myself. And it is a pain in the neck. But rent to own, that takes a lot of the pressure off. So people are losing money renting. That's actually our #1 reason that people work with us, is they buy it as an investment property, and then they pretty much figure out, after usually between 7 and 11 years they've been into this property, before they actually figure out that this thing isn't making them any money. And so our #1 reason that owners work with us is they actually are losing money renting the property. That is by far our biggest reason that people work with us. And then people whose mortgage is more than the value, well, obviously when the property is worth less than the mortgage, there isn't a realtor in the world that wants to touch that one. And right, Kelly?
Sorry, Ross. Yeah, I was trying to unmute myself there. Yeah, for sure, because if there's not enough equity, we're on the hook for the commission if we sell it and there's a shortfall. So we have to be very careful.
But then what Kelly can do, because she's got some information that, I mean, I can't even remember how many years ago I was teaching Kelly on the rent to own business, a long time ago. Well, not
2004.
Oh
2004.
my goodness. Oh my goodness. Well, the industry has changed a lot since then even, but I mean, Kelly, even though she's a realtor, when she finds people like this, and that's not the case in Vancouver very often, probably almost never, but in other places, it wouldn't be a problem for her. She could still work with these people. People facing foreclosure. Wow. Alberta, Saskatchewan comes to mind right now. And we, using the rent to own strategy, we can actually go in there and stop the foreclosure, which is just such a weight off their shoulder if we can stop the foreclosure using this strategy and actually make some money on the property, where most people couldn't even think about how to do this. And really, it didn't cost us anything to make this happen. It just needed a little knowledge. So huge opportunity there for the western provinces right now, Alberta, Saskatchewan, even Manitoba, some areas in Manitoba. And people with massive lender IDP now, for early payout penalties, interest differentials, and that sort of thing, that happens in the Lower Mainland. It happens in Toronto right now, where people would love to get out of their property, but oh my goodness, they're set for a term. And we had one person that we work with in the Toronto area. He had 20 homes, and his average payout penalty was $30,000 plus. I can't even remember the exact number. It was over $30,000 average on his 20 properties. Well, he's stuck on this property. He's going, I can't sell these properties. I don't want to lose $30,000. So by working on a rent to own and us corresponding the buyout or the purchase of the property with the term of the mortgage, he avoided all those interest differential penalties, which is a huge saving, obviously, to him. All right, now, people who are sick and tired of management, that is actually our #2 reason that people want to work with us. They're sick and tired of managing the properties. They thought that, getting into real estate investing might be something that they want to do and, build a, retirement income out of and that sort of thing, but they forgot about all the headaches. And they're just sick and tired of these things, especially when you combine that with losing money every month, because that's what's happening. So they're losing money and they have to manage with, late payments and vacancies and spending weekends repairing the place, and they're just sick and tired of that. It doesn't make any sense financially for them anymore. And then people are going through a divorce. Well, these owners, a lot of them are, the property goes into foreclosure simply because the husband and wife, neither of them want to pay for it. Well, I'm not paying for it. I'm not living there. And the spouse that stayed at home says, well, I can't afford to pay for the place for myself. So, you know, if you're $1 short or you don't make any payments, the bank still calls that a default. And so the place goes into foreclosure just because nobody's paying it. And, you know, I bet Kelly even sees that right now happening quite a bit.
Yeah, we see all kinds of situations.
And just crazy stuff. So that we can go in there and we can actually help in those situations, or people going through a bankruptcy. They might be forced into bankruptcy if they don't do something, if they can't make their payments, or they might be, sometimes going through divorce causes the bankruptcy. Or going into foreclosure, always declare, you know, people would always declare bankruptcy. So if we can stop the foreclosure or maybe help out on the divorce side of things as far as their home is concerned, well, we can stop a bankruptcy and help them. And so we're helping a lot of owners in a lot of different ways. Okay. Then the tenant buyers, these are the people that Kelly was mentioning don't have enough down payment, or their credit's not in the shape it needs to be in right now. All right. It's a little bruised and they don't have that 600 plus score that they're going to need to get their credit or get their mortgage, qualify for the mortgage. Or they're going through a divorce. Again, that divorce word comes up because they don't even want to buy another place. Even if they can afford to buy another place, they don't want to buy it until their divorce is finished. Because, you know, she gets the gold mine, he got the shaft or whatever. They might go, they don't want to buy another place in case they have to split the equity in that one too. So we help people a lot because they're technically tenants until they buy the property. Bankruptcy again, or foreclosure again, or they're first-time homeowners. A lot of times they're going to need help with the first time, either for their down payment or.
And Ross, this is the biggest thing that's happening in BC that we're noticing. I just got an application from a couple. They make good money. They've got $100,000 to put down, and they even have co-signers on their financing, and they still didn't make the cut, and they're going to be evicted from their rental in June, but they've both been recently divorced, and they're not in a position to qualify for financing right now, and they're desperate. They're basically desperate. So they put an offer on a house, and they're going to lose the house. They're not going to be able to remove conditions. So the mortgage broker who is trying to set this up for them isn't going to get paid, even though he spent about 20 hours on the file. And the realtor now, who's the buyer's realtor, he's not going to get his commission for purchasing the house for these folks. So everybody, and the sellers, they're frustrated too, because even though it's a hot market, it's just nice to have your house sold when you want it sold, because they're depending on buying another house based on this sale. So it's amazing when realtors and mortgage brokers can have this strategy in their back pocket. They can help so many people avoid so many headaches.
Oh.
Well, it's funny that you mentioned that, Julie, because this just happened to us on the weekend. We were contacted by a couple that had a house under contract. They were declined for financing, so they called us. So we're stepping in today, putting an offer in on the same house, the rent-to-own company, and then we'll sell the whole deal to an investor. But the people will still get the house they wanted, and it'll be a win-win. It's just going to take them more time to qualify.
Yeah.
Yeah, and you know, the beautiful thing, and I'm just going to, I know I was probably going to talk about this in a second, but I think it's appropriate to talk about right now. As far as Kelly just said the investor's going to buy the property, and one of the beautiful things about using an option, and I know realtors and mortgage brokers will love this, is the way we do it. The tenant actually doesn't get any equitable interest in the property until he actually purchases the property. Unlike a VTB, a vendor take back, for example, where the vendor was be willing to take back a mortgage on the property to move the person into the property. Then they have to, if that person ever didn't pay them, they'd actually have to foreclose on them to get them out of the property. Well, this is a major issue, but with an option, the way we set it up, there is no escrow interest in the property, so therefore they are technically tenants. And if this tenant was to not pay their rent and their option money, well, they could be evicted just like any other tenant. So it's such a awesome strategy to have in your back pocket. It just solves so many problems in so many ways. I remember my business partner Neil said if you put the word option at the end of any transaction, it almost always makes it better. And when he said that in class one for the first time, I never heard that before, and I started thinking about it, and it was so true. The option is such a powerful tool to have in your toolbox. Okay. Now, Kelly mentioned people that are self-employed. I mean, the banks and the lenders look like actually like you're from Mars all the time. And I know one of the things that mortgage brokers struggle with all the time is getting people who are self-employed qualified. Maybe they haven't been doing their business the way they should have been doing it. I mean, no one ever taught them that they should be paying themselves every month in a set salary so that they can build this up and show the lender how much they're making, and not just paying themselves whenever the company can afford it and that sort of thing. So, teaching them how to get qualified as self-employed people over the time that they're going to need is such an advantage to be able to help a tenant buyer or potential tenant buyer get into a property. Immigrants, they're just new to Canada. We're doing that with some people in Brandon, Manitoba right now. They are mostly Vietnamese, and they need help getting into their first home because a lot of them are new to Canada. So this is a great strategy for them, and the lenders are willing to work with us on this. So that's kind of cool. New mortgage stress test is making it harder than ever to qualify. A lot of people that were going to qualify, as Julie was saying, all of a sudden under the new stress test, they're like, whoa, this puts a new twist in things. So we need to find out a new way, a new strategy to make this whole deal work for them. It seems like rent to own for a lot of people is new, or it seems like it's trending more. It's becoming, people are talking about it more because it's becoming more mainstream. But it certainly is anything but new. It's been around a long, long time. Now, a lot of people haven't been doing it correctly. We have, but a lot of people haven't, and it's sometimes the name has got tarnished out there. And so for any of those that you are listening and you've heard maybe some bad things about rent to own, or especially industry professionals will hear things, I encourage you to be with us on April 7th and 9th and learn how to do it correctly so that your name doesn't get tarnished or anything else. When you do this right, it's such a great addition to your total business. All right, so here's some of the ways that we can work with our industry professionals. Now, on the left-hand side, you're going to see, TB. That stands for tenant buyer. And then the next column is the issue, and then typical what happens to our industry professional. In the center there, on the right side, it says, well, what are some of the advantages when you use the rent-to-own business? So again, some of this is repeat again, and so we'll just go through it. But there's none or not enough down payment. Well, there's no deal or no commission for the realtor or the mortgage broker. But if you work on a rent-to-own basis, well, we can create that over time. We can create the amount of down payment they're going to need over time. And the IP, the industry professional, gets paid. So let's just stop for a second and say, because I know the question is, well, how do I get paid? I know how I got paid on my typical, when I sell a property and when I put the mortgage together, I know how I'm going to get paid. Well, how do I get paid if I'm going to do the rent-to-own business? And well, this depends. If you're doing it on your own, well, there's 3 different ways you're going to get paid. If you're setting this up for yourself, you're going to get paid up front on the initial option money. You're going to get paid in the center, and Kelly was saying there's $2,800 a month cash flow. So that's money as you go along, and then you get paid at the end, and that's the difference between what you buy the property for and what you sell the property for. So there's 3 profit centers. There's the beginning, the middle, or as you go, and at the end. Now, if you're going to be working with an investor, let's say, and they're doing the rent to own, and you refer somebody to them, either a mortgage, or sorry, either a tenant buyer or a homeowner, doesn't matter which, well, then the way you get paid is as creative as you want to get. Yeah, there's so many different ways that we work with our mortgage brokers and our realtors, and I'll leave that up to you to decide how you want to work with your investor. But there is a lot of different ways for you to get paid, and really, are you competition here? Not at all, because typically, if people don't have enough down payment, for example, well, you couldn't have done the deal anyway. So being able to team up with a rent-own specialist, or even doing it on your own, just to open the door for you to make money that wasn't there available for you anyway. Or the tenant, number 2, the tenant buyer.
Ross.
Go ahead.
No, Ross, I was just going to say, a lot of realtors come to me with rent-to-own clients, and I pay them a referral commission, 25% on the commission on the buy side, because we actually take people out shopping right on MLS to find the property that they want, whether it be a condo, a townhouse, or a house. And we also pay a referral of usually $2,000 for someone who sends us a tenant buyer. We have more than enough investors, so we don't need referrals for investors, but we're always looking for new tenant buyers.
Oh, absolutely. And, you know, that's Kelly's way of doing it, and we do it a little bit different, but whatever works. And, you know, does it have to be the same for everybody? No, you can, like, there's so many ways of skinning the cat, as they say. You can do this, you know, you can do it through your broker. If you're a real estate agent, you do it through your broker. You can, you know, whatever you want to do. I'll leave that in your hands. And anyway, meeting the tenant buyer doesn't meet the stringent mortgage qualifications. Well, we can move them into the property right away. We can qualify them for in the future, and we don't put anybody into a property. There's no tenant buyer goes into our property until they meet our credit counselor and or our mortgage brokers, because we don't want these people in this property if they can't qualify for it in the future. We're not out there just to get their big, you know, option money up front, or their down payment, and as you might know it. We're not interested in that. What we want to make sure is that these people they do have a plan, and they will be able to buy the thing in the future, the property in the future. Now, their credit may be below acceptable for the levels for the lender, so we work with them, and they have to they work on a continuous basis with our credit counselor. We happen to use Richard Moxley. It's great, and he will work with them, you know, on as much as they need, either monthly or tri-monthly or whatever they need to get their credit to the level that's going to be required, so that when the mortgage broker goes to get them the mortgage, they're credit ready. Okay. Now, they're divorced. We talked about that already. So, you know, if they're going through divorce, or you're not able to work with them, but we can move them to a home, and the industry professional gets paid. Or maybe they're self-employed. There's not enough history. Again, we talked about that. Well, we can move them into the property right away, and the industry professional get paid. They're a new job. Man, we just came across that last week. One of our clients had a new job. Well, she doesn't qualify right now because she just got a new job, and there's not enough history for the lender. Well, there's no deal, no commission, but on a rent-own strategy, you can actually move them into the property and get paid. Or they're a new immigrant. We just talked about that, the ones in Brandon. Or they're hard to sell property, a homeowner this time. On the left side, the homeowner is hard to sell, no deal, no commission, but we can work with the homeowner directly and pay. Or not enough equity. You talked about that already. So, and the last page here is the mortgage is more than the current value. We talked about that for the homeowners. Or facing foreclosure. Or bankruptcy. So all these reasons that for real estate agents and mortgage brokers and people, they normally just can't work with these people. Well, when you have the rent-to-own tool in your toolbox, a whole new world opens up to you. And I can just think about all the people that you've maybe come in contact with, even in the last month, who you just couldn't work with them for whatever reason, either the people that wanted to buy or the people that the homeowners. And if you'd had this tool, there's a lot more money for you to make, and it just becomes a really nice complement to what you're already doing. Okay, you don't have to do anything new, you just have to have the knowledge to do something different. All right, so tenant buyer due diligence, they must meet our industry professionals. We won't put them in a property until they have. They must have an initial, minimum initial amount to invest. They're not going to get in with nothing now. And they have to pay. Now, this is one of the important things that we do. They have to have the ability to pay approximately what they're going to pay in the future. So whatever their future principal, interest, taxes, and insurance payment is going to be, we want to know that they have the ability to do that. Because if they don't, they just don't qualify for this property. We're going to have to find them something else. All right, now they might not have enough down payment, their credit might be not to snuff, but they got to have the ability to pay. Okay, so some of our guidelines that we live by, and what we're going to be teaching you on April 7th to 9th is this: is that tenant's initial monthly option consideration is what we teach you is 100% refundable. Now that exceeds what the current CMHC guidelines say and lender guidelines. Some lenders want your option contract to say that it's 100% refundable. Some lenders say it should be 50% refundable. CMHC actually says, if you go to their website, they say it should be refundable, not must. They say should, but most lenders have taken that to be a must. So what did we do? We took it to the extra, step, and we just said, okay, no problem. We'll make that initial and monthly option consideration 100% refundable. There hasn't been one lender yet that's complained about that, okay? So they must meet our mortgage brokers and credit counselors prior to us accepting them as clients. If you don't want to meet our mortgage broker or our credit counselor, well, you're just not going to be our client, okay? And we will never put them in a property they can't afford. Our tenant buyers are treated as tenants, because that's what they are. And so they're protected under all the Residential Tenancies Act, just like any tenant would be. All right? And we will only do win-win-win deals. And what is the win-win-win? Well, the first win is for the owner. The second win is for us. And the third win is for the tenant buyer. They have to win. In other words, the owner's going to get all the owners we work with always make more money working with us than they would on their own, always. Number two, the tenant buyer is going to be buying the property at fair market value or less at the time they purchase the property. And number three is we make money in the middle by setting up the whole deal. And that could be you guys, that could be the industry professionals. All right, so it's a total win-win-win scenario. We believe in building solid working relationships with our industry professionals. When we have people that we like working with, we stick with them and we refer business back. We believe in one hand washing the other hand. So when we have a realtor that we like working with, we refer people to them and they refer people to us, and it works out very, very well. We have an unblemished track record. We want to keep it that way. You can search the internet. You're not going to find anything bad about our company and the way we do our business, because our business is all 100% ethical, 100% moral, and we do everything by the letter of the law. So there's, and that's what we're going to teach you guys to do too. We do not want bad press. We want to lead the industry. And we are leading the industry. I can assure you nobody has a 106-page lease that I've ever met other than us. And what we're going to teach you, nobody has a 29-page option contract other than us. Nobody does what we do to make this a total win-win-win. Okay? All right, so here's the realtor's advantage. Rent to own is not your competition. It's an advantage. The realtor teams with properly trained rent-to-own professionals, their reputation is protected. I know that's so important to realtors that they protect their reputation, right, Kelly? I mean, if you weren't, if you were out there doing shady stuff, I mean, how long would you be a realtor, right?
Not very long.
And not only that, the industry would find out, and Kelly would have to answer to her industry because they have their own set of watchdogs. All right. When a realtor knows how to do rent-to-own correctly, they have a distinct advantage over all other realtors. And I know Kelly's already told you that for sure. And rent-to-own is the finest vendor financing available. A lot of realtors I have noticed over the years I've been in this business, you know, as a real estate investor, we're always asking the vendor to do, you know, some kind of vendor financing, take back a mortgage, especially on commercial properties, that sort of thing, because options can be used on commercial properties as well as residential properties. And a lot of realtors will advise their owners not to do a vendor take back mortgage or a second mortgage or even a first mortgage sometimes, or third, simply because of the risk involved in that if the purchaser doesn't pay, they're going to have to foreclose on that property to get the property back. Well, with using an option, there's no such thing as foreclosure. They're just a tenant, and they'll have to move as any other tenant would have to move. All right. So with the rent-own done right, much of the risk is eliminated. And I believe with what's happening right now with the median income, you see, here's what I'd like to explain. When I got in the business, the average home was 1 to 2 times the average wage. And today, the average home is 8 to 10 times the average wage. In other words, and in Toronto and in Vancouver, that's way out of whack. I mean, it is way more than that. But that's the average in Canada. So what this means is that the median income isn't keeping up with the home prices, and it's getting harder and harder and harder for people to qualify. It used to be that a single income home could qualify for a mortgage no problem. Now that's a rarity that can actually happen. There usually has to be 2 incomes in the property or in the household income to qualify for the property. Well, that's an indication that this is getting harder and harder and harder, and lenders and investors who know about the rent-to-own are understanding that rent-to-own is becoming mainstream. It's not going to be very much longer where rent-to-own is just a normal way to buy a property. Realtors like Kelly who have got on and know how to, or what we call early adopters, have a distinct advantage over the people who are just coming in and going, well, how does this whole thing work? All right, this will become mainstream, and I think, you know, as a professional, you got to understand what's coming down the pipe. I believe, I've been saying this for a long time, that rent-to-own will become the new norm. And obviously, when lenders are starting to approach us and say, well, can you show us how this is working? It's you know, my predictions are starting to come true. All right, so Julie, are you there?
Yes, I am. Sorry, I was trying. I had to unmute myself.
Did we want to show a typical Kelowna deal, or did you want to skip over this?
I think, well, maybe just go
real fast.
Yeah, why not? I think, okay. Yeah.
So what I'll do is I'll just show a typical Kelowna deal, and I'm going to get right down to the bottom line, okay? And show them the typical Kelowna deal would be a 3-bedroom home, $450,000, appreciating at, say, a modest 3% over the next 3 years, and a purchase price of almost $500,000. We kept it under the $500,000 just so we could still use that 5% down thing. The initial option consideration is $10,000, the rent is $2,100, and the option money is $500. Now, $2,100 and $500 added together are $2,600. That's roughly what their PITI will be for this property in the future, so that makes sense. And I know some people from the Lower Mainland are going, $490,000. I wish. Yeah, so it works on any price range, even over the million. Doesn't matter the price, but this is just typical Kelowna deal.
Well, that might be, it might work for a like a condo, right? And sorry to interrupt, but I want to just point out that these numbers are important, especially for the folks who are going to be who are here or are going to be watching the recording, who are industry professionals, like in the prairies, because you can do these deals and be the deal maker and be an industry professional. And it's a great way to create another income stream, because if things are slow when you're a realtor, you still need, at least last time I checked, still need money to be coming in. So it's just another strategy to create, like I said, a fantastic income stream. So back to you, Ross.
Yeah, and what we're going to do now, Julie, and the reason I threw these slides in was just for the exact reason that what you said was, hey, they're already in the industry. These people are already in this industry. If they knew what to do, what I'm going to show here is how you can make an extra 10 grand just doing 2 of these deals a year.
Yeah, they're on the front line, and sometimes I don't even know if they're aware of it. Because they're the mortgage brokers are talking to people who need to get rid of their homes or need to refinance or need a solution. Same with realtors. And wouldn't it be great if a realtor could turn something that would otherwise be not a profitable deal into money in their pocket and help a lot of people along the way?
Yeah, absolutely. So what I'm going to do is I'm going to explain the first year, and then I'm going to skip to the end, and I'll just show everybody how you can make an extra, 10 to 12,000 a month just doing an extra 2 deals a year on a modest, $490,000 home. So, on the year one, let's say in the end of the month here, March, you do 1 deal, and you don't collect 100,000 like Kelly did. You collect $10,000 of initial money, and you get an extra $500 a month cash flow, not $2,800 a month. So obviously these are modest deals. So that would be in March, you made $10,400, which is not a bad little month, but you kind of worry out, so you don't do any work in April, May, or June, but you still have that $500 a month coming in. And of course, June, July, and August, nobody works in the summer. We're all out in the lakes and having fun. So, but come September, you get motivated to do another deal, and you have another $9,900. And this, by the way, this $9,900 and this $500 is based off that Kelowna deal I just showed you. And so that's $11,900 coming in, because you got that other $500 a month coming in from the first deal. And you take the rest of the year off because you really outworked yourself and did 2 deals a year this year. So, I mean, man, that's a massive amount of work. I understand, 1 deal every 6 months. So you made a modest extra $2,200 a month. And then, of course, you just rinse and repeat this, and you do it for year 2. And I won't go through in the essence of just making everybody get through this on time here. But by year 3, you're making $4,000 a month just doing 2 deals a year. That's not bad little extra income, But in year 4, and by the way, I just wanted to explain to you that the next 3 years is going to go by whether you do this or not. If you decide to do nothing, I guarantee the next 3 years are going to go by. Or if you decide to do 2 deals a year, 1 deal every 6 months, this is the result in year 4. In year 4, in March, you're going to make $61,900. April, May, and June, you got a nice little $3,000 a month coming in on rents. In September, you're going to make another $61,900. In October, November, December, you got an extra $3,000 a month coming in rent. So you're going to make $142,000 in year 4. That's almost $12,000 a month. Now, even for realtors that are multimillionaires, an extra $12,000 a month for doing an extra couple deals a year, not bad, not bad. I've got mortgage brokers looking at that and going, hey, I'm all in on that one, So would this change your life? So would the investment in yourself be worth it? The investment is April 7th to 9th with OREIG. Would that be worth it? And the tough realization is that the last 3 years have gone by. What did you do? The next 3 years are going to go by. What are you going to do differently? I think this just absolutely changed your life. I mean, it's not like we had to say you had to go out and get another job or work full time with this. we're talking finding an extra, 40 to 80 hours a year for the next 3 years to make 12 grand a month. It's actually staggering when you think about it. All right. So Julie, these are your deals, right? They're not as like Kelly's deal, but these are yours.
Yeah, exactly. They are. This is a house that we have in Kelowna. And what ended up happening is this realtor actually had opened 30 doors for this really nice young lady. And she fell in love with this house, and only to, of course, find out that she couldn't qualify for financing. So this realtor, his name was Colin, and he's about to lose. He's about to lose the commission on this deal, and he spent a lot of time with this girl. And not only that, the mortgage broker who was involved was going to lose out as well. We were able to step in and with an investor and buy this house for Nadine. Her name was Nadine, and she couldn't be more thrilled. It's walking distance, for her kids, and just a fantastic win-win-win situation, like you said. And the cool thing about the mortgage broker side of this, it was awesome that Colin still got his commission, and it worked out really good because the deal went through. But the mortgage broker, he got the financing for the investor who purchased the property, and he's also going to get the financing for the tenant buyer. So he got business now, and he has 100% certainty of business in the future, basically pipeline business. So it's really worked out well.
Awesome. And then you've got this deal here was another deal you did.
This is a deal that there was no realtor involved, actually, because the house was upside down. It was underwater. So it was a real estate investor who was in trouble, and he said, I've talked to 15 realtors. They can't help me. Can you help me? And I'm an investor, and so I helped him out with this deal. But there was no equity, and this investor had put $20,000 into the house and carried it 8 months vacant. And seriously, any realtor that he talked to was just always of the perspective, well, you're going to lose another 20 if you have me sell it. So it just wasn't a solution. It wasn't a solution that any of them knew how to fix. And it ended up being a great deal for the tenant buyers that we placed in this property, because we ended up getting $15,000 down, and it cash flowed over $600 a month. It was a great deal for us as investors, but it totally could have been an opportunity for a realtor if they knew how to do it. And then
it's unbelievable how many times, and look at all the money you've got down, 25, 15, 15. I mean,
yeah,
nice little numbers.
And no risk. I mean, didn't take any risk, and it was just nothing but pure profit for us. This situation was a mortgage broker called me. It was the same mortgage broker that we used for the 2 slides ago. And again, it's great because when mortgage brokers know that I do this kind of thing, they'll call me, and it means business for me, which is great. But the mortgage broker had done an application for these tenants who were living in this house and didn't want to move. The tenants had a child with some health issues, and they just really didn't want to have to move, but the seller was selling. So the mortgage broker contacted me and said, I have some more tenant buyers for you. Can you help these people out? And so a very similar thing, very similar to the strategy that Kelly uses, called tenant first, rent to own. We found an investor to buy the property for these tenants. And what was great about it is, again, the mortgage broker got a deal. He's got a deal now, and he's got, these people are going to be closing in the next 6 months. He's going to be getting the financing on that for that mortgage as well. So it really, again, it's a win-win-win for everybody. It was a win for the seller, it's a win for the tenant buyers, win for Matthew, who is the mortgage broker, and of course a win for us and our investor as well. It was great.
Don't you love it when everybody wins?
It's so fun.
I know.
Yeah.
I know. So having that tool in your tool belt, so to speak, and being able to jump on board, I think the hottest trend in real estate right now is rent to own. And certainly in the slow markets and even in the hot markets, it just absolutely works. I think it's, Kelly, and I know other realtors that know how to do this. The proof's in the pudding, and I know that I'd like to hear from Kelly about, maybe just some of the advantages that she's had as being a realtor who understands the power of the rent-to-own business, and just, come and learn from decades of experience and be there and put yourself in a position that you don't have to do anything different. You just have to be have a little knowledge and be in the right place when the people that can't qualify or the people that can't sell their home, and you can help them out.
Russ, what I wanted to point out, which I didn't mention, was that expensive rent to own we did was actually for my mortgage broker. And it's a testament to, obviously, the fact that the industry professionals know that we do it well. He owns multiple properties, and a lot of them are in Fort St. John, and they're not liquid right now, or he'd take a loss. But he could see that the time was now to buy something closer to Vancouver. And he looked at it as a way of just auctioning and betting that the 3% appreciation that he's being charged is probably going to be less than what the property goes up in that time. And the crazy part of it is, the investor who actually did the deal thought it was such a great idea and strategy that he now wants us to do one on an even more expensive house on the west side for him with 6 suites. So he saw the opportunity from doing it for the other guy.
Isn't that amazing? I mean, that's just the way it works. And, Kelly, I've had so many people that we do a lot of work in Ontario, and especially the Toronto area. And, people are saying, oh, prices are so expensive down here. And I've always been telling them, the price doesn't matter. The option works in any market. You're just living proof of that.
Yeah. And the thing is, it's just the quality and the sophistication of the tenant buyers is that much greater at the higher levels, and they're business people, and they're so easy to deal with, and they're so solid. Because, this rent-own tenant is a very high-income earner with very good credit. It's just that he'd have to pull out over $300,000 from his business to do it right now if he was buying, because he'd have to do a 25% down payment, and he just doesn't want to do it.
Oh, it's so true. I mean, you're right. I mean, we always enjoyed working with a higher-end client. I remember when Kelly first phoned me and said, "Hey, Ross, I got a $50,000 initial option consideration." I went, "Wow, that's more than I've ever gotten before." So then I had to go out and we had to get it twice. We've got 2 of those. And now I find out the day that Kelly does 100,000, I'm like, oh my God, what am I going to do to keep up with it?
But Ross, that wasn't my highest one. My highest one was 250,000.
Oh, you're making me crawl here. Oh, well, hey, Kelly, you want to come and teach the course?
No, I'll leave that to you. That's your expertise.
Yeah, no, it's such a awesome opportunity, and thank you, Kelly. It's so good to hear from you, and I love speaking to people who are actually in the business and in the trenches actually doing it, because sometimes it's hard to believe it actually works, because it sounds so simple and there's so much money to be made, and people go, well, what's the catch? And really, there isn't any catch other than you need a little knowledge.
That's all it is. Knowledge is power.
Yeah. And the other thing too, Kelly, is we have, if this was something wrong, I mean, there's no lawyer in the world would touch it, but I mean, we're doing everything right, and the lawyers love us, the lenders love us, the mortgage brokers love us, realtors love us. I mean, all we got to do is but there's, you got to do it the right way. You've got to protect yourself. You've got to do it with one property and one title per auction company. You can't mix them up, because if you do, you can start to get everybody in trouble. And so when you do it right, it all works and everybody wins.
Mm-hmm. And that's all the information that you're going to be covering in our 3-day event that's coming up April 7th, 8th, and 9th right here in Kelowna. So basically, Kelly, I know you're not worried about competition, but you would recommend this for industry professionals, yes?
Oh my God, it's just like, even one deal puts you that much further ahead, but it just enables you to do business where nobody else can. And I prefer to just work in areas where I don't have competition, and then I always have business. I'm not one of these realtors that goes up and down all the time. I have business all the time, consistent flow. And it's because I work with these unique kind of situations.
Mm-hmm.
And I highly recommend anybody who's listening that wants to work in the Lower Mainland and needs well, there isn't a better realtor out there. I absolutely, and I work with a lot of them.
Mm-hmm.
Kelly is the top of the heap. So if you need a realtor to make things happen, contact Kelly Fry. She is the very, very best that there is in this business.
Absolutely. And you know, these rent-to-owns have really, really changed my life too, because I have a few of them myself. I sometimes buy our own deals, and you know, they pay for my kids' private school education. The positive cash flow is so great on these things, and they're my favorite tenants. I mean, you can't believe in the rent-to-own meetings that we have with the tenant buyers and the investors, almost every time the tenant buyers start to cry because they're so grateful for the fact that someone's helping them get to the next level. And it's such a good feeling versus your usual tenant-landlord situation that's a bit adversarial at times. You never get that from rent-to-own tenants. It's a totally different relationship. It's like a joint venture, really.
Yeah, they treat their house like their own. They do their own repairs. They feel, you know, and then they've got skin in the game, right? So it gives people an added incentive to just make sure and put the corrections in place that needs to be put in. It adds the motivation that's needed in order to make these deals successful. Absolutely.
Yeah. And you know what, Julie?
Mm-hmm.
Think of rent-own as the finest financing available, because it's good for them because they don't have to qualify for this financing other than the qualifications that we put in place. And from a investor's point of view, the people that are living in the home don't have equitable interest in the property. Just in the the odd case, it doesn't happen very often, but in the odd case when we have to evict. So it's absolutely the very best financing you can ever have in real estate. There's nothing better.
Absolutely, absolutely. So I've got a question. Do I have a question from Jeff? Jeff, did you want to comment on something? I'm going to promote you to panelist real quick. Hold on a second. Jeff, can you hear me? You're muted. Hold on a second, everybody. And by the way, Kelly, while I'm getting Jeff online here, can you type into the chat how people can contact you if they are looking for a phenomenal realtor, and that'll go out to all the people who are going to watch the webinar. You'll be able to contact Kelly, and everybody that's here, if you want to reach out to her. Again, she's just a phenomenal person to work with. If you want to, oh, good, thank you for that. I'll make sure that's on the recording for folks who are watching the recording. So Jeff, did you have a comment?
Hi there. Can you hear me?
Yep.
Hi, Ross or Kelly. I wanted to just, with everyone you've come across over the years, what is the biggest mindset change or challenge that people need to kind of come right the ship on to kind of embrace rent-own? What is the main, like for me, or anyone like me wanting to do this in a bigger way, what is usually the stumbling block mindset-wise? That's my question.
Okay, Jeff, are you a realtor or a mortgage broker or investor? Or?
From an investor standpoint, Ross.
Oh, okay, so from an investor standpoint, the rent-to-own for a lot of people who are, most people haven't heard of it. So we have to explain to them in a very simple way, what rent-to-own is. And so the biggest hurdle we have to overcome is actually fear of something new. Because whenever you have a person who has fear, the automatic response is always no. So it's getting them over the hurdle of what rent-to-own actually is and how it works. Then I would say, just to expand on that, and then I know well, you know, Kelly can expand on it from a realtor side. But from my experience from working with realtors is that there's a lot of people out there that aren't doing it correctly, and it gives a tarnish to the realtor's name. So they've heard from their mortgage broker, or they've heard from, you know, experience, or somebody in the industry say, oh, you know, don't touch those rent-to-owns, they're not good. Well, you know, you have to overcome that hurdle. Then from a mortgage broker's perspective, you have to overcome the hurdle of, well, how are we going to qualify these people in the future? And when we show them the way that we do this and the way that we actually transfer title directly from the owner directly to the tenant, it all makes sense to the lender and to the mortgage broker, and by the way, also to the underwriter, who's actually going to see all of the contracts and our option contracts. So the biggest hurdle we have to overcome, Jeff, is information, correct information. Kelly, did you want to contact or comment from a realtor's point of view?
Yeah, for sure. Like when I'm attracting investors who are buying our deals, because we sell them as a package with the tenant and the house and the contracts all together, we wholesale them. The only pushback that I get these days is sometimes because the market went so high last year, like it went 35% high, and the rent-to-own contracts were at 3%. Some investors say, well, you know, I'm losing that appreciation because the tenants just gained it. And I say to them, well, you know, the whole goal here is to help people get into home ownership. And I say to them, well, I thought you wanted cash flow. Well, yes, I do want cash flow. I say, well, you can't, it's hard in the Lower Mainland or the Fraser Valley to get positive cash flow. So you have to make a choice. If you want to build your long-term wealth, then you should do buy, rent, and hold. But you're going to be at break even most likely. If you really want positive cash flow because you need that in your life, then you're going to have to invest in a rent-to-own. It's just the way it is. You're selling it in 3 to 5 years.
Mm-hmm.
Awesome.
Thank you both. I love both those comments.
Yes.
Knowledge overcomes fear, for sure.
Yeah.
And that's the one thing we have to educate the people who have maybe heard of rent-to-own in a negative way. We have to educate them on the way when it's done right, it's you know, the best. When it's not done right, there can be challenges. So that's why, you know, the OREIG is putting on this event, is it's just part of this whole mission to get out there and just educate people on how to do it correctly.
And that's the key. That's the whole reason why we're putting it on. It just needs to be out there. It needs to be done right by people so that more people can actually be helped. More people can actually get these deals done. And I just feel really strongly that as industry professionals, if you have this in your toolbox, then when things do slow down, because it does happen, it's not a matter of. Kelly just talked about how she couldn't get it was very, very difficult to get a rent-to-own deal a year ago, and now since the market has just slowed a bit down in the Lower Mainland, it's more and more possible. So it's not a matter of if a market changes, it's just a matter of when. And so we encourage you to come on out to our Rent-to-Own Done Right event, April 7th, 8th, and 9th. I've got a bonus offer for anybody who decides to register, and the link is on the page somewhere around here if you're watching the recording on how to get started or get registered for the next event. By the way, the investment for this event is $19.97, and that's for 2 tickets. So if you are a realtor and you have a mortgage broker that you work with quite frequently, team up, come on out, learn how to do this, and you're going to have a distinct advantage over anybody else in the industry. And in addition to that, with that investment, I am going to be giving for free immediate access to my Street Smart Buyer course. And this is a course, it's all online, it's totally self-paced, so you can basically watch it and participate in it at any time of the day, 24 hours a day. It's all about how to find no money down, low money down, no bank qualified deals, how to find motivated sellers, how to market to these people so that you can find properties that are easy to get into, paperwork on how to buy no to low and no bank qualified deals, how to present to motivated sellers, how to find joint venture partners, and again, it's all online. So it's about 30 hours of training and hundreds of pages of workbooks and tutorials. I sell this online for $697, but it's yours for free when you register for the rent to own done right. You'll get immediate access to it. And again, the course is coming up again here in Kelowna, April 7th, 8th, and 9th. It's going to be at the Best Western. We've got an amazing room deal for those of you folks who are coming out from maybe the prairies. We've got a big gang of people coming from Saskatoon, and we've also got quite a few coming out from Calgary. So come on out, and you're going to save some money on your stay. There's even some meals included with your room, so there are discounts there. We want to make this as accessible and as affordable for you as possible. So the link to register for the Rent to Own Done Right course is on this webpage. It's probably below this recorded video. So thank you for taking the time out of your day in order to learn more about why Rent to Own Done Right might be a fit for you as a real estate professional. And Ross, do you have anything else to add before we close the webinar?
Yeah, the one thing I have to add is that anybody who registers for the event, we're going to offer them a monthly call with me to answer any questions that they have and access to as many questions and answers as they need, and they'll have my direct line to do that as well.
Oh, that's great. Wow, that's very generous. And you have people that already do that with you, and it's hard to put a price tag on it, but that's what do you normally offer that for?
Well, it depends on if they do it for a year. It's $147 a month.
Oh wow. Okay. Yeah.
Yeah. So that we're going to throw in as just to get them off on the right foot, and they can phone me and get access to me or any of my team just as much as they need to really get off and get started. And because sometimes when you first start out, as you know, Julie, you don't always have all your questions answered. You think about something after you leave the course and you go, oh, I should have asked that. Well, now you can. Yeah,
it's so important and very generous of you to offer that accessibility. Very, very great webinar today. So excited. Lots of really unique information specifically for real estate professionals. Kelly, thank you so much for joining us. I know you're a really busy lady, and I really appreciate the time that you've taken to add to this webinar. I really appreciate it. Do you have anything to add before we close out?
I just want to say that after I spent my 3 days mentoring with Ross, and he taught me how to do rent to own, I did a deal right away in Surrey. And that first deal I made about $65,000 with. And it was a sandwich lease option. And, it had a few challenges along the way, but Ross was always there. And I'll never forget when I called him as soon as I got the deal. And I said, the seller wants me to put down $1,000, Ross. I don't know what to do. You told me not to put any money down. And he said to me, well, if you're going to secure an asset of that value for $1,000, I think it's a pretty good deal. You should do it. So I did. And it all worked out very well. And it was basically $1,000 into the deal to make $65,000. So it's great knowledge.
That's fantastic. Wow.
Awesome.
What a testimonial. That's fantastic. Thank you again for being here. Everybody, thank you for joining us. Thank you to those of you who are watching the recording. Make sure and get registered right away because we are filling up. And we look forward to seeing you April 7th, 8th, and 9th right here in Kelowna at the Rent to Own Done Right course. Thanks a lot, everybody.
Bye-bye.
See you later.
Bye-bye.